Hi, welcome back to the Futures Trading Hub. I'm Jeff, or A2 Trader. As you all know me, I'm going to be your host today for a conversation about time and sales, and we'll explain that here in just a minute. I first wanted to touch bases on a couple things. First of all, this is going to be a shorter video, so to everybody out there that likes them shorter. I'm going to ask you to stay to the end, though, because I want you to really see what's coming up the next two episodes or the next two segments. The next segment is going to be how we bring these three indicators together that show you how to reduce your anxiety in a trade. And the next one is going to be what you've all been trained on. It's a particular strategy, if you want to call it that. It's a particular strategy that everybody's trained on that there's used by itself is very difficult. I have found a way to make use of that strategy to make it very beneficial to me, and I think it's going to take a couple of segments to deliver that, but it's going to start in the segment after next. So stay tuned. I'll go through much more detail and explain it in a little bit more detail at that point. So I'm also excited to share the new website that I've got. So I'm very close to coming to completion, or at least a completion where I can launch it on futurestradinghacks.com. Now, I've had a website for almost 8 years, I think it was, with A2 Trader. I decommissioned that last year. I was in the process of blogging and helping people with their trading and helping develop people to learn how to trade strategies, how to build strategies. But then I had dropped off that for a little while, and I got the bug back up. I started this all back together, and I've pulled the data from the a2trader.com website, and I have put it all in futurestradinghacks.com. So it's going to combine those, plus it's going to add some services, which I didn't have on the old side. I'm going to add some services where I can be available to help people overcome some of the obstacles along the way, as well as some of the indicators that I'm talking about in these particular segments, as well as some of the indicators that I'll have on the website. They're basically custom developed indicators, and I'll make those available to people on the website, and I'll be able to show you, especially in this forum here, I'll be able to show you the value of all those indicators, and the ones that you really want to get, it'll give you a place to go pick them off of. So this next episode, we'll go ahead and get started. This next episode is time and sales. Now, this is very much like market depth in that there's a lot of movement, a lot of colors. I want to show you what those are, and then I'll show you how when you see waves of them occur, I'll show you what that means. Because used in conjunction with the rest of the indicators that we talked about, market depth, candle X-ray, and this one, it will help keep confidence that you're in the right side of the trade and reduce your anxiety. I've shown this to people who've been using this for years, my combination, and they have said these are game changers, at least to reduce the anxiety. Doesn't necessarily improve your dollar number, but it will keep you in the trade knowing that it's the right direction you're going to go, and will reduce the amount of times you pull out of a trade too early or you let it run too long, right? It will be able to tell you and provide that level of information to you. So let's go ahead and get started. I'm going to go in and start with a few charts, walk through a few static charts just to show you what time and sales is. And then on the other side of that, we actually have some actual lab time and in the live trading market, or in the videos of the live trading market, so I can show you how these work on different types of trades and where the value is of this. So let's go ahead and get started. Okay, so let's talk time and sales. So I consider time and sales a wave volume indicator. Now, what all that is, that's simply a fancy way of saying this is a visual representation of a group of volume of buys and sells. That's all it is. That's all I use it for. It's used for a lot of other things in a lot of different places. People use it for different things. This is all I use it for. So I want to go through that because this is what I can attest to. So we all know, and I've said this before, and I'm going to say it every single segment until time ends for me. volume. It's all about volume. Everything has to do with volume. If you get into a low volume market, you don't know how to predict the direction of the trend. If you go in the high volume market, you don't know. Any single high volume trade can flip it around on its back. So what you're looking for are to make decisions based on volume. And that's what we're looking at. In especially during the times that we're in a trade, we're trying to reduce our anxiety. This volume will tell us we're in the same side. Hopefully you're in the same side as the majority of the volume, right? Hopefully. Now, it doesn't always work out that way, obviously. We're like baseball players. We're supposed to be designed to hit 300. But if you're hitting 350, you're doing absolutely fantastic. So that's the way we're made up. And so I want to show you how you can help stay calm in those times that are of an uncertainty. So let's talk about this particular time in sales window. So time in sales is part of the ordering process window. There's a number of different things you can do with it. I look at two things and two things only. I look at price, the color of price, and I worry about the size. That's it. There's time. The type is a trade type. The exchange is a CME. These don't even bother me whether this was a below the bid or at the bid or at the ask or above the ask. It makes no difference to me. But what I want to do is try to be able to see where there's a large volume in one direction. If I'm short, I want to see all reds. If I'm green, I want to see. If I'm long, I want to see all greens. That helps me understand if I'm in the right place. So let's talk about what these are. Remember we talked about a tick before? A tick is a movement in price. Notice they're identified here by a plus and a minus. So it's a tick down, tick up, essentially. And if we go down here to the bottom, or let's just start right here, we're at 5,009 even. We go up a quarter point. We get a plus. Now this was an actual sell at the bid. These were all sells below the bid. Now there's a sell at the bid. But it brought the price up, and it's identified in green. It brought the price up, so that's green. Again, 5,009, then it brought the price up 3/4 of a point to take it to 50.10, because everybody, you know that MES or the ES goes 5,009, 5.5, 575, and then 510. So this went up 3/4 of a point. That's still one tick. It's one change in price. Okay, that's important to note. Now, the only thing really we're worried about with ticks is because if you use tick charts, right? That's really the only real reason you have to worry about ticks. If you're in minute charts, that's really not as valuable. But this will tell you price moved a bunch of times in one direction or the other. That's important to note. This is red, so this moved up. This is green, so this moved up, right? This moved down. This moved up. That's important to note. And the color is the other aspect you want to think about. Now, the other thing I look at is the size. And we'll talk about the size in a minute, but this is contract size. One contract per trade is essentially what you're seeing for the most part here. So this is the volume, and these are the ticks. Okay? Moving to the next one. Again, in this case here, we have 9 ticks. You've got 2 down there. There's 3, 4, 5, 6, 7, 8, 9. There's 9 ticks on this window, not counting the green one down at the very bottom where you only see a quarter of it. Now, but what's important is in those 9 ticks, let's say in those 9 ticks, their candle just began. Well, but there's 52 volume down, so it would shoot up red. Like if you're looking at candle X-ray, you'd see a huge increase in red and a small increase in green, which would tell you that the sellers own that candle. That's telling you price is going to go down or has gone down for the most part. It started at 50.10 at the bottom down here. It started at 50.10, and up here it ended at 50.10, right? So they might have had the volume, but they didn't move the price down. They moved the price down within here by 4 points, but they didn't move it. They moved it down and it came back up. That's important to note, because if they move the price down, you would hope they would keep it going down if you're short, but it would bring you positive if you were long. Now, if I was long, this window would make me nervous, right? But if I was short, this window would give me all the comfort in the world. Okay, so anyway, that's one way to look at it. The other one thing I wanted to mention was this 12 represents 12 contracts at this in this one order. There were 12 contracts in this one order. If there were 12 contracts in this one price, okay, let's say one, two, three, four, five, six. If there were 6 contracts on this one price, but different orders, this is what it would look like. This was 12 contracts in one order. That's powerful because that's a pretty good sized player, right? So 12 contracts leveraged the way futures is, that could be a large sum. Obviously, it's 12 times, but that could be a significant amount of contracts, which could help us better understand what the big players are thinking about. Okay. So again, let's talk about volume. Let's talk about this in volume, but look at this as it's simply a visual representation of a wave direction. That's all it is. And that we don't want it. You see how I'm taking these indicators and just taking one single aspect out of market depth that nobody ever looks at. I mean, the candles in market depth nobody ever pays attention to, but I do because it gives me comfort and reduces anxiety about me predicting the direction that it's going to go. We went through that in segment number 3, I think it was, and in segment number 4, or maybe that was 4 or 5, and this is 6. Maybe in the previous segment we looked at candle X-ray and how candle X-ray actually helped me understand who was winning that candle. So if I was short, I was hoping it was red was winning it. If it wasn't, now I was hoping it was green. If I was long, I was hoping it was green. Nonetheless, we're simply looking at the color of this. This is how we're staying in control during a trade. Keep in mind, that's all I'm asking you to look at. All right. So let's go look at the live market and see how this reacts in a couple of different trades. Okay, we're back. Notice I moved from the bottom corner to the top corner. That's because I recorded a live session, threw a couple of comments in there, but I recorded a live session with the time and sales on the left, and my picture got in the way. Last thing I need you to do is be worried about what you're missing. So let's go ahead and get started. I'm going to try to speed this up and see how this goes. Look at the screen we got in front of us right now. We're looking at the mini NASDAQ market futures 25. So it's the MNQ M25. That's the March contract 25. And so what we're looking at here is a 6-10 tick chart. I just like them. I can read them well. When we start looking at zones, I don't do zones on ticks, just so you know. I don't even consider zones on a tick chart. I'll go do those in the minute charts, and day charts. And if I'm looking at investment, I'll be doing them in the weeklies as well. But for this, it's just easier to see a faster moving candle to watch this build. Notice this. I took this when the market was down almost 900 points, and that's the NASDAQ. This is during the tariff. I pulled this during one of the days right after the tariffs were put into place. So you might see through this some wide swings, but those wide swings you'll usually see on a 15-minute tick chart. You won't see on a you don't usually see as well on a tick chart. Back up, stop, and the wide swings you normally see on like a 15-minute chart, you won't see on a tick chart because it's a much faster moving module. So just let's take a look at this and we'll see where this takes us. I pulled out a couple of trades to look at. This is the first one, identifying the beginning of a run. Now notice over here on the left, this is nothing. This is just a bunch of everything. It's just how the market works. Notice there's no movements or anything like that either. I'm going to go ahead and see how fast we can do this. The market's going to start running here in just a minute, so it's the beginning of a run. So see there it takes off. You can see right here. You can see the large cells in this candle here, and you can see it up here. Look at it over here. That's correlation. You're correlating what you're thinking is happening, right? So this could have been, and it never would have been, but this could have been on just a couple trades that took it down this far, but it isn't. Look, I mean, there's a lot of trades, a lot of below the bids. So let's let this keep going, and we'll watch this play out. So as you watch this, and you're in a trade, you're watching this. We'll show one in a trade in a minute. Right now, we're just trying to show the start of one. You can see that the wave that I'm talking about. Like, well, I thought I stopped it. It's going up now. It's going to come back down, and you look, see the wave. Well, we'll look past that, but let's find another one. It'll come in here in a minute. So that, see, this could be considered a wave. It's really the start of one. This is a normal pattern for it to start falling. So, which is very predictable. You can see all this red over here. That's the wave I'm talking about, and you'll see it continue its way on down. And see why this is so important. This indicator here is awesome. It tells you all you need to know. There were twice as many volume was twice as many sells as buys in that. You know it's going down. You know it's going down with power, right? Keep in mind the market does go back and forth, so you're not going to see consistent all sells even when it continues down. You're going to see some, but notice this is just above the average line. So we're looking over here. I got caught up. Sorry about that. We're looking over here. You can see the wave go through. That's making me feel comfortable that even though I'm going to see a turnaround here, and we're going to see the candle move, that makes me feel comfortable. It's going to turn back around and go back down. See, because of the volume, we're in a larger volume market, right? So see that red wave that just passed. Here, I'll try to catch one here in a second. Oh, no, I missed it. Not quick enough. It goes long. The red wave goes. You'll see green waves as well, right? See, you can see this down here, and the green waves are pushing it up. That might get a little nervous if you were short there, but you have to see this and understand that it's likely going to flip back around. Let's speed it up a little bit. There we go. Yep, and it did. Flipped it back around. Now let's see the red waves coming in. It's going to keep going down. You see those red waves. You can tell the difference between the wave and the. Let me catch the wave. There's a wave, right? So see the difference. See all the reds and a few of the greens, right? Versus, we'll see it where it's normal, where it's not. There's no wave at all. Like right there, there's no wave. Bunches of greens, bunches of reds, back and forth. That's just normal. What's happening today. But what I'm trying to do in this particular screen, I'm trying to understand, am I comfortable with my decisions, what I expect it to do. I'm expecting a run here. And we'll talk about a trade here in just a minute, but and then you could come back and watch this. I might even just upload this whole video for you, but so you can see there's a wave coming. And when you start seeing that wave, then you'll start seeing the patterns change, right? So what you're seeing, what you're looking for here is just confirmation of what you think is going to happen. All right, I think we're pretty close to going over to this is number one. I think there's 6 different actions I'm trying to show here. These are not waves there, right? It's just simply the buys and sells of what you would normally see, right? So again, what you're looking for is a wide red, wide green wave. These are what I call wave indicators. That's just my definition too. See, you were looking for the breakout. You didn't get it, right? It's going to go back up a little bit. And see, you're starting to get the volume down here correlated with this over here. That's a bit of a wave. You're seeing a lot more green than you would normally see if that was going to break out. If that was going to break out, you'd see a lot more red than the green. And you're seeing a lot more green than you are here red. Let's go to the breakout. Okay, enter the breakout. So, yep, okay, so you saw that. I jumped ahead, sorry. So this is going to be enter the breakout. So what's going to happen is we're looking, we expect it's been going down all day. It's down 900 points. So we're expecting it to continue down, but we don't want to get into anything until we see it move, right? So I'm trying to get confirmation that what I believe is going to happen happens. So, but I'm starting to see a red wave. There's one, right? That's not much, but it'll start here in a minute. See, you're seeing a lot more green there than you are red. And one other thing is, you see a huge candle like that, like this, and you saw that green, but it really didn't go up very far. That's an indicator. If you get a lot of volume and it doesn't move that much, then they're not trying to move the market that direction. They're just trying to get in the market or get out of the market. Depends where they were at. Now you're starting to see a little more red coming through, and you can see on the left. You can start to see, there it is. There's a red wave. There's a green wave too on top of it, so you got to be careful. Whoop, yep, and it turned around a little bit. Here's a red wave. There's a continuous wave. Look at all this red coming through. It's going to break out. Well, maybe not. Let's see. Yeah, it is. Well, I know it does break out, but it's going to bounce around a little bit like that, back and forth. But you're looking for the wave in order to try to validate what your expectations are. So I'm going to pull this up a little bit. Yeah, there you go. So this was on the way down, right? Now it's on the way down. You're trying to see how long is it going to stay that way. Well, these indicators are more of an indication of that. But you're seeing a lot of volume going through here. And again, you're looking for this wave, just like what we just saw. Red wave, big red wave. And it's going to continue on. And when you get a lot of volume over here, you're going to see volume here as well. And I should have had the market depth in here, so I could actually show you how it's on the predicting side. Now the next segment we're going to have is the market depth, right? So run with the breakout, go. So this is going to take off. So we're in the next segment, and we'll talk about this here in a few minutes. We're going to show all these together. How all of them put together will actually provide you confidence, reduce your anxiety during a trade. Keep in mind, that's what this is for. We're trying to fix our thought process so we don't make mistakes while we're in the middle of a trade. That's what we're trying to do here. It's also the hardest to do because it involves us using some very complicated and fast-moving indicators such as market depth and this time and sales. So as we go through here, you can see this red wave's coming through all over the place, and it's running on through. So let's see if we step ahead a little bit. We're still in 4. I want to get to the 5th one, which is a trade. Okay, here's the run. Again, we're looking at these red waves come through. That's what we're looking for. If this was on the other direction, it would, quite frankly, it would be the other direction. We would be going. Oh, there, I'm moving the chart around. It would be going most definitely it would be going it'd be green waves, right? Green waves, and it would be moving forward. So let's see what happens if we move this forward a little bit. Well, looks like I'm pulling up the time and the matrix. So this is a matrix, and it's available on any platform. This is the 5-minute chart down here, which I'm not really looking there. Don't forget to like and share and subscribe. Very important. The more people we can get, the more in the community, the more we're going to be able to get done, and the more feedback we're going to have total across the board. So it's very, very important. So let's see where we're going here. We're seeing the wave. I'm going to try to speed this up a little bit. turn. Okay, so now we're looking at a turn. I'm going to go back. So I think we just did it. Okay, so now we're looking at a turn, right? So we've come down here and we've hit bottom, and now the market's going to turn on us. Now, see, normally I would trade right there, especially since I broke. This is the low of the day. So especially since we broke the low of the day, I would be shorting right there. But look at what's happening. So we can see the green. Look at all this green. Look at the waves of green that we're seeing. That's telling me that that's not going to turn, right? So it's telling me it's going to keep going. Now look at this. It keeps going. And this is all telling me that if I got in this trade here, like my normal strategy would put me in there. And it didn't because probably because the RSI is off kilter. It doesn't meet the RSI requirements. But nonetheless, I would normally have gotten in there, and if that was continued downward, I would have still made some money because I wouldn't have got stopped out yet. But I see all this green. I don't see red waves. I'm not expecting it to turn. I'm expecting it to continue up. See, look at all this green. That's telling me that, and you're going to see a few waves of red because the market breathes. It goes up and it goes down and does it. But we're trying to get confidence. So when this turned, and if I was in a short, I would know to have gotten out right there, right? When I saw it start moving with all the green, it started going green here, and then right there is where we got the large column of green. That's where we'd have seen the waves of green, and we're still seeing the waves of green, and it's still going up. So you can go back and look at this. You really are going to have to look at it a couple times because, quite frankly, and then your eyes have to get used to looking at this. I can look at it and tell when there's a wave. When there's a wave and I'm short, red wave, I feel more comfortable, and I don't make mistakes. When there is unless there's green. If I'm short and there's green waves, that makes me feel uncomfortable. It makes me make decisions. But you have to look. You have to get used to looking at this. It's the same as what I talked about with the how fast the market depth moves. Well, it moves very, very fast. So but your eyes will get used to it. Reading a tape. This is the other aspect of reading the tape. Here we're reading the tape afterwards, right? In other words, this is after with market depth. We're with reading the tape, but market depth we're looking at prior, right? Before the trades are executed. Now we're looking at with time and sales. We're looking at after they're executed, right? So I'm going to drop it here, and we're gonna go talk about what's coming up next because I'm excited to tell you about one of them. In the next couple segments. So please get in, like, share, and subscribe because it's really important that we get a community built so we can start getting feedback from everybody else, because I hate to tell you this, but where you're seeing problems, there's 10,000 other people in the world seeing the same problem that are looking for solutions. And if you help me understand what you're looking for, I can take a segment out and focus on that. Like if you have a trade that you believe should have worked, send it to me. Let's look at it. We can even do a live session. If there's enough people want to do it, I'm very open to that. I used to do it all the time, and they're very, very helpful. So, all right. Well, let's go talk about what's coming up next. Okay. What's next? Let's talk about what we're going to see in the next two segments, and then a little bit for future ones coming up. So first of all, we're going to try to talk about in the next segment, bringing it all together. Using the candle X-ray, time and sales, market depth, in-trade confidence, predictability, how to exit a trade at the right time, and how to get more profit from not being greedy. Greed, that's a bad word, bad activity. You'll find out one of these days, if you haven't already, that greed is what will be your downfall if you can't get a grasp on it. So the first thing we're going to talk about next, again, like I said, in-trade confidence, and then the segment after that is supply and demand. Okay, we're going to talk about supply and demand in grave detail. We're going to go through multiple different segments with supply and demand, and I'll talk about those here in just a minute. So for the trade confidence, We use market depth, candle X-ray, time and sales. We talked directly about all of those. And then price action on both in this case, a 610 tick chart. We will use, if somebody wants to, a different chart if necessary. But we'll use a 610 tick chart for price action. We'll use a 5-minute price action chart. And then we'll include the matrix in there. There's nothing special about the matrix. Everybody knows how to use it anyway, I'm pretty sure. If you don't, you might want to start there. But we'll use it. I don't like to even have it in my chart. We're going to show it there so we can show how each one interacts with each other. But I'd highly recommend you take that out. We'll talk about that in the next segment. The segment after that, we're going to talk about supply and demand. Now, there's a couple of things I want you to know in this, just to let you to feed up into that, is everybody teaches one version of supply and demand or another. Okay. Now, we all know that. We all are struggling. Everybody was struggling, and that's the reason you're here. And you're struggling because you don't understand it. You don't really have any where to go get help. They keep telling you the same thing over and over, and the same thing over and over isn't working. Well, I'm going to tell you right now, supply and demand as a strategy does not work. There's no strategy in my mind as supply and demand. There is, however, something to be aware of and indicators, so on and so forth, about supply and demand. But supply and demand by itself doesn't work. I know thousands of people that use it. I do not know one person that's ever been successful at it, and I'm going to include that one person is one of the training organizations was touting this one person as the key player, the smartest player. You got to follow this guy's strategy. Their strategy was supply and demand, and that person was not successful over time. And there's an FTC report to show that, right? So we'll gear you towards that later, but I use variations of supply and demand. I don't ignore it. It's a force to be beckoned with, but I don't use it for entries at all, period, the end. No entries. I look at it and I do not use it for low volume supply and demand, right? I do not use supply and demand, which does not have a pointer to the zone. We'll go into detail on that down the road, but the largest key factor is you have a pointer to that particular supply or demand zone. And then because of the nature of my particular strategy, we've talked about my strategy before. I'm not going to go into it in detail, but I exit at supply or demand zones, and I take my profit. And I do that because the nature of my particular strategy, that would go against me, and I would end up losing or not making as much money down the road. So supply and demand, in my view, is an exit ramp, but it is definitely not an entry ramp. Now, supply and demand is going to be looking right now. I'm looking at 4 segments. And I think it's just so important that we spend some time here because I think there's a lot of people that's how they know how to trade, and they're not successful at it. So I want to talk to that. And right now, I also want to say, send me any questions you have to down here to this email, a2trader@futurestradinghacks.com. That'll go away here in a second. There you go, at the very bottom of the screen. futurestradinghacks.com. Segment, just let me know what you want to talk about. Let me know where your issues are. Let me know where your concerns are so I can make sure I include them in these sessions. So segment 1, I want to talk about supply and demand, how we fall short, and how consistent success is completely unachievable. You can keep trying, but consistency and success are not one and the same in supply and demand. Segment 2, I want to talk about what makes supply and demand strong and weak. And that's real important because there are weak demand zones, weak supply and demand zones. And people use those as entries and ignore them as exits, right? When it's a strong zone, ignore it. Or when it's a weak zone, focus on it, right? So we need to understand what makes a strong and weak zone. And we need to understand how to define supply and demand zones for trade consistency, right? And back up, not just trade consistency, but profit consistency. Because if we ignore supply and demand, we will come short of our profit targets. Doesn't mean you're going to be losing trades, but you're not going to get as much out of one as you wanted. We're also going to talk about when to use supply and demand in your strategy, right? I have a strategy uses multiple different indicators to make a difference. And those indicators all are superseded by supply and demand. So how do you use supply and demand in your particular strategy? That's important. There's also multiple methods to define what supply and demand areas that will improve your trade consistency and when not to. So when do we want to define supply and demand areas that are good for us, and when do we not want to? That, I think, is the last segment. I'll probably, right now as I talk through this, segment 5 is going to be a wrap up of all the questions and everything else that came from these 4 segments, would be my guess. So please, by all means, make these sessions. They're going to be very important. We want your feedback. Remember, community, the larger the community, the better the communication is going to be, the better the individual question and answers and responses are going to be, and the individual training is going to be. So please comment below, share, like, or subscribe. Send me an email at a2trader@futurestradinghacks.com. However you want to do it, just communicate with us. We're here to help. That's all I'm doing this for, folks, is to help you. I'm not doing this to make money. So I'm doing this to help. So as long as it's helpful, I want to keep doing it. But if it's not really as helpful as I think it is, then steer us in a way that is going to make you be a better trader. Okay? So happy trading. Have a great trading week and the week coming up. And we'll see you the next one on how we bring all these together. Okay? Have a good day. Take care. Happy trading.